You are not in control of your financial life. You think you are. You see the score go up. You feel accomplished. You see it drop. You panic. But that number was never yours to begin with. It was engineered in the 1980s by a private company to turn your entire economic existence into a betting line that banks could trade on. The credit score is not a measurement of responsibility. It is a leash. And right now, you are sprinting in circles, thinking you are making progress, while the radius of your freedom shrinks with every on-time payment. This is not about debt. This is about control. The system does not want you to pay off your balances. It wants you afraid of the number dropping. It wants you borrowing just enough to keep the score climbing. It wants you performing. And every single action you take to raise that score makes you more predictable, more valuable, and more trapped. You are not building wealth. You are building a profile that someone else owns. Here is what is happening. Every month you make a payment, the system records it. Every time you open a new card, it registers. Every time you close one, it logs the loss. Your utilization ratio, your payment history, your credit mix, the age of your accounts. These are not neutral facts. They are variables in a formula that determines your access to housing, employment, insurance, and mobility. The score is a gatekeeper, and the gate only opens when you play by rules you did not write and cannot change. This is where it gets darker. The score was built to solve a problem banks had, not a problem you had. Before 1989, lenders made decisions based on interviews, local reputation, and subjective judgment. It was slow, it was inconsistent, it was human. Then Fair Isaac Corporation introduced FICO. They claimed it would make lending fair. What it actually did was automate discrimination and make it invisible. The algorithm does not care about your circumstances. It cares about patterns. And if your pattern does not match the profile of a profitable borrower, you are locked out. The system does not see you. It sees a number. And that number is not a reflection of your character. It is a prediction of your profitability. Let me take you back. Not to warn you with ancient history, but to show you the blueprint. In the Roman Empire, there was a system called the peculium. Slaves could earn money and buy goods, but they could never own anything outright. Everything they accumulated legally belonged to their master. The illusion of ownership kept them compliant. They worked harder, believing freedom was just around the corner. But the rules were rigged. The master decided when or if the slave could buy their way out. Sound familiar? You work, you pay, you watch the number rise, but the rules change. Suddenly, your utilization is too high. Suddenly, closing an old account hurts you. Suddenly, a medical bill you never saw tanks your score by 60 points. You do not control the outcome, you just perform the labor. Move forward to medieval serfdom. Peasants were tied to the land through debt. The lord owned the fields. The serf worked them. Any surplus the serf produced went to paying rent, taxes, and fees that were constantly adjusted. The serf could never save enough to leave. The system was not designed to be escaped. It was designed to extract maximum labor while maintaining the illusion of eventual freedom. The credit score works the same way. You are allowed to participate in the economy, but only under terms that guarantee you stay in motion, stay anxious, stay performing. The moment you stop, the penalty is immediate. Miss one payment and the score drops. Stop using credit entirely and the score stagnates or falls because you are not generating data. The system does not reward independence, it punishes it. Now look at company scrip. In the late 1800s and early 1900s, American coal companies paid workers in scrip, a currency that could only be used at the company store. Workers were paid just enough to survive but never enough to leave. The prices at the store were inflated, the debt accumulated, the worker stayed trapped. They called it owing your soul to the company store. The credit score is the modern scrip. It is the currency of access. You need it to rent an apartment. You need it to get a car loan. You need it to qualify for a mortgage. Some employers check it before hiring you. Insurance companies use it to set your rates. You cannot leave the system because everything you need to live is locked behind that number. And the number is controlled by private companies you never elected, never contracted with, and cannot negotiate with. This brings us to stage one. The invitation. You are young, maybe 18, maybe 22. You get your first credit card offer. They tell you it is a tool to build your future. They do not tell you that you are enrolling in a surveillance system that will track every financial move you make for the rest of your life. You swipe the card. You make a small purchase. You pay it off. The score ticks up. You feel accomplished. You have been trained. The reward is immediate. The cost is invisible. You do not realize yet that you just gave 3 private credit bureaus permission to monetize your behavior forever. Then comes stage 2, the optimization phase. You learn the rules. Keep your utilization under 30%. Never close old accounts. Pay on time, every time. Diversify your credit mix. You start performing. You are no longer using credit for need. You are using it to feed the algorithm. You open a new card for the sign-up bonus. You keep balances low, but not zero, because zero looks like inactivity. You treat the score like a game, and games are designed to be addictive. You check the score obsessively. It becomes a metric of self-worth. A 10-point drop feels like failure. A 20-point gain feels like victory. You have been gamified, and the house always wins. Stage 3 is where the system turns. You need something real. A car, a house, a business loan. Suddenly the score is not a game anymore. It is a gate. If your score is high, you get access. If it is not, you pay more. A 60-point difference can cost you tens of thousands of dollars in interest over the life of a mortgage. The system has you. You cannot afford to let the score drop. So you stay in the game, you keep the balances active, you keep the payments flowing. You are now a revenue generating unit. The banks are not lending you money as a favor. They are lending it because your behavior is predictable and your data is valuable. Stage 4 is the treadmill. You are maintaining the score, but life happens. Medical bills, car repairs, a job loss, an unexpected expense. You carry a balance. The interest piles up. You make the minimum payment because that is all you can afford. The score does not care. It registers the higher utilization. It drops. Now you are paying more in interest, which makes it harder to pay down the balance, which keeps the utilization high, which keeps the score low, which increases your rates on everything else. You are in a debt spiral, and the system designed it. This is not bad luck. This is the math. The credit score was never built to help you escape debt. It was built to keep you servicing it. Stage 5 is the dependency lock. You have been in the system so long that your entire financial life is structured around it. Your apartment lease required a credit check. Your car loan is tied to your score. Your insurance premium is partially based on it. You cannot leave. Even if you wanted to live without credit, the score would decay. A thin file or no file is treated as risky. Landlords reject you. Employers question you. You are punished for opting out. The system has made itself mandatory. And the 3 companies that control it, Equifax, Experian, and TransUnion, are private corporations. They are not accountable to you. They sell your data to lenders, insurers, employers, and marketers. You do not get paid for this. You are the product, and the product has no rights. Stage 6 is the realization. You look at your score and you see it clearly for the first time. It is not a measure of responsibility. It is a compliance metric. It measures how well you follow the rules of a system designed to extract profit from your behavior. A high score does not mean you are winning. It means you are a good customer. You borrow regularly. You pay reliably. You generate fees, interest, and data. The system loves you because you are profitable. And the moment you stop being profitable, the moment you pay everything off and stop using credit, the system stops rewarding you. The score plateaus. The offers dry up. You realize the game was never about freedom. It was about keeping you in motion. You are here. Right now, check your patterns. Do you feel anxiety when your score drops? Do you avoid closing old accounts even when you do not use them? Do you carry a small balance because you heard it is better than paying everything off? Do you check your score more often than your savings account? These are not personal quirks. These are conditioned responses. You have been trained to optimize for the score instead of optimizing for your actual financial security. The system has successfully redirected your energy away from wealth building and towards score maintenance. And score maintenance is not the same thing as financial health. Here is the math. The credit score industry generates billions in revenue every year, not from you directly, from selling your data. Lenders pay for your credit report. Insurers pay for your score. Marketers pay for access to your profile. You generate this value, but you do not capture it. You are a data mine, and the score is the shaft they use to keep you digging. Every on-time payment, every new account, every closed card, every balance transfer, it all feeds the system. And the system is designed to be asymmetrical. When you do something right, the score inches up slowly. When you do something wrong, it drops fast. This is not an accident. It keeps you afraid. Fear is the most effective motivator. Let me show you the incentive structure. The credit card industry makes money 3 ways. Interchange fees from merchants, interest from cardholders who carry balances, fees for late payments, balance transfers on cash advances. The most profitable customer is not the one who pays off their balance every month. It is the revolver. The person who carries a balance, makes minimum payments, and stays in the game for years. The credit score is engineered to create revolvers. It rewards you for using credit regularly. It penalizes you for not using it. It punishes you for closing accounts. It keeps you rotating through cards, balances, and payments. You think you are playing the game, but you are the game. This is not a conspiracy. This is a business model. Fair Isaac Corporation licenses the FICO algorithm to lenders. The 3 credit bureaus collect your data and sell it. The banks use the score to price risk. Everyone profits except you. You are the input. You generate the data, take the risk, pay the fees, and absorb the anxiety. The system is perfectly rational from the top. It is just not rational for you. This is where the promise turns into a leash. You are told that a good credit score would give you freedom, access to loans, better rates, financial flexibility. And technically that is true, but freedom in this context means permission to borrow. It does not mean wealth. It does not mean security. It means you are trusted to go into debt and pay it back with interest. The higher your score, the more debt you are allowed to carry. You are not being liberated. You are being qualified for a larger cage. The illusion is designed to feel like progress. You see the number climb and you feel like you are moving forward. But forward toward what? Toward more credit, toward larger loans, toward a lifetime of payments. The system has convinced you that access to debt is the same thing as financial success. It is not. Debt is leverage, and leverage cuts both ways. It amplifies gains, but also amplifies losses. And in this system, you are not the one holding the leverage. The banks are. The reward is the bait. The habit is the trap. Every time you get a credit limit increase, every time you get approved for a new card, every time your score crosses a threshold, you get a dopamine hit. You feel validated. The system is designed to feel good in the short term and costly in the long term. The points, the perks, the cashback, these are not gifts. They are part of the cost structure. The interchange fees merchants pay are baked into the prices you pay for goods. You are funding your own rewards. And the rewards exist to keep you swiping. The more you use the card, the more data you generate, the more predictable you become, the more valuable you are to the system. You do not need to quit the world. You need to stop playing this game on their terms. Here is how. First, decouple your self-worth from the score. It is a tool, not a report card. Use it when necessary. Ignore it otherwise. Do not optimize your financial decisions around a number controlled by private corporations. Optimize around actual wealth building. Pay off high interest debt. Build an emergency fund. Invest in assets that appreciate. The score is downstream of financial health, not upstream. Second, stop chasing points and rewards unless the math genuinely works in your favor. Run the numbers. If you're spending more to earn rewards, you are losing. If you are carrying a balance to keep the card active, you are losing. If you are opening new accounts just to boost your score, you are feeding the system for free. The goal is not to maximize your credit score. The goal is to maximize your financial autonomy. Sometimes those align, often they do not. Third, understand the asymmetry and plan accordingly. The system punishes you faster than it rewards you. A single mistake can cost you months of progress. So build margin. Keep utilization low, not because the algorithm demands it, but because debt is risk. Automate payments not to please the bureaus, but to protect yourself from penalties. Treat the score as a side effect of good financial hygiene, not the goal itself. This is not about becoming a hermit or rejecting all credit. It is about seeing the game clearly and refusing to let it define your worth or dictate your strategy. The credit score is a control system. It was designed to make you predictable, compliant, and profitable. Your job is not to win the game. Your job is to stop letting the game win you. The system wants you looking at the score instead of looking at the structure. It wants you focused on your individual number instead of the collective mechanism. Because the moment you zoom out, you see it. Millions of people, all performing the same behaviors, all chasing the same metrics, all generating profit for the same handful of companies. This is not about personal responsibility. This is about systemic extraction. And the only way out is to stop internalizing the logic of the system. You are living inside a machine that treats your financial behavior as a commodity. Every action you take is recorded, scored, and sold. The score is not a neutral measurement. It is a tool of control. And the control is so effective because it feels like freedom. You are allowed to choose. You can open accounts, close accounts, spend, save, borrow, repay. But the rules are written to ensure that most of your choices lead you deeper into the system, not out of it. If this opened your eyes to the cage you are living in, subscribe. Because in the next video, we dismantle the rest of the illusion.